Types of intangible assets. There are two categories of intangible assets. Intangible assets with limited life and intangible assets with unlimited life. Also remember, the IAS 38 also went on to several changes or updates. Those days, what IAS 38 was discussing, you should, now, by one more thing, property, plant and equipment, when we are using it, what is the expense we name it? What is the name we give for that expense? In property, plant and equipment, for the usage, for the wear and tear, we name it depreciation. What do you think the name we should give here? We give here, the name is amortization. So the old IAS 38 is saying, you should amortize your intangible asset not exceeding, can you complete? Can you complete the sentence? Not exceeding ...
Lifetime. Useful life.
No, that's all. Not exceeding. Useful life only. Not exceeding. Then I would expect a number.
It's cost of.
No. Not exceeding 5 years. That's the old theory. They say that your intangible asset you should amortize not exceeding 5 years. So you could choose 2 years. You could choose 4 years. Or you could even choose 5 years. But you cannot choose 6 or 8 or 10 or 20. This is when old standard. New standard said intangible assets are categorized as to two headings, with limited life and with unlimited life. For those unlimited life, can we amortize? I didn't get you. You asking me a question or you giving me a statement?
You can categorize this as
The question was, can you unlimited intangible assets like lifetime? Can you amortize that one?
Yeah, that's my question.
That's the question.
yes.
No.
No.
Yeah, life is unlimited. Now land, can you depreciate?
No.
No. Same like that. The intangible asset where the life is unlimited, you cannot amortize. But let's say goodwill. We are very famous organization. We talked about Arthur Anderson in the last class, right? Very famous auditing firm in the world. But what has happened one fine day? They had to cancel everything, they had to close everything, kalas, pulushitama. So then you would end up facing any reputational risk. So what you got to do is, there is something called, you need to review for impairment. You need to review for impairment. What you should do? You should review this for impairment. What is impairment? Every end of the period, the book value that we foresee, what we think, is it the same or the now we will next talk about IAS 36. Then we will go on to discuss the complete understanding as to what is impairment. But for the time being, understand that your market value is less than your carrying value. When the market value of your intangible asset, if it's much less than the carrying value, the difference between these two is said to be impairment. Or we can also say that when the market value is less than the carrying value, such asset has been impaired. What has happened to such asset? That is impaired. When it is impaired, how to calculate impairment? Then this minus this. That's the calculation, isn't it? Understood? So now this is for what? unlimited life. If the lifetime is unlimited, then you do this. When you should do? On every year. If you still, the carrying value is less than the market value. If suppose situation like this, if the market value is bigger than the carrying value, you don't need to do anything. You can just continue keeping it. But when the situation like this, then only you go to perform impairment. This is for what asset? Intangible asset whose life is unlimited. Now we talk about life is limited, then you should amortize. What is the number of years?
5 years.
No,
That is before.
that is
standard.
old standard.
Old standard.
Now, based on the estimated remaining useful life. Estimated remaining useful. So this, now if I face this situation, what is the difference? Carrying value minus market value, we name it impairment. Where will I disclose this? What do you think the double entry would be? Now I already have intangible assets. Now we end up having an impairment. So intangible asset is an asset, so it's a debit balance. This answer, let's say whatever the answer is, I should credit here and debit to in the I can say impairment. Right? Debit here coming from intangible assets, and this will go to P&L as an expense. Would there be a possibility of reversing it? Remember, any intangible asset whose we have already recognized impairment, there is no reversal. You cannot reverse it.
Next.
Any year. You call it irreversible damage is done. You know the sentence, no? Sometimes we say this. Now for this one,
One question.
yeah.
You are conducting impairment this year.
Yes.
Next year.
Mm.
Then the subsequent year,
Mm.
you get a market value is more than a carrying value.
That's what I am saying. You cannot reverse
Reverse
it. No.
Even the market value is more.
Yeah, that's what. It will be then from that point of view. So here, let's say I have the intangible asset, and then I have this. Let's say 10 years. We calculate amortization. A double entry will be same like depreciation. Debit amortization, credit accumulated amortization. And then you present accordingly. You debit amortization, and then you credit accumulated amortization. And this will go to P&L. This will carry as balance. And then this and this will be reported in the balance sheet. Clear?